conversation with the pioneer of technical analysis in India, only on ET Now.
You're tuned into the F&O show right here on ET Now. Right, we'll continue with our coverage on the F&O show then, but before we go ahead and get you strategies from Dr. C.K. Narayan, quick disclaimer from our end. Please be sure to consult with your individual financial advisors before taking any trading positions in the derivative space, because while you may land up making windfall gains, you can also land up losing quite a lot on your leverage positions. Bring it back to the discussion then. Dr. Narayan, thank you very much for joining in on the show this afternoon. Dr. Narayan, come to you on your strategy. You've got an ACC, a cement counter. Why would you pick that up?
Yeah, it seems a little funny to look at cement counters during rainy seasons, right? But then if you look at all the charts of the cement stock, they all seem to have hit down into supports and shown a willingness to hold up, particularly if you look at ACC or Ultratech or something. You will find that they have not participated in the decline of the market at all. So there seems to be some amount of clear-cut resilience in all of these stocks. So which is what encourages me to give out a long future recommendation in ACC. Today it has been trading somewhat better. I think if the market were to revive, ACC could be one of the stocks along with other cement stocks, of course, Ambuja, Ultratech as well. But ACC is something that I would pick 1000, 1010, that range, and have a stop loss below 995. Look for about 1030, 35 on the upside. So clearly the only reason to pick it is because it's outperforming the market by holding on to its gains on the upside and not participating on the decline at all. So there are people who are willing to buy it as compared to so many other stakes shares where they only want to sell them.
All right, By.ACC futures around the level of 1000 to 1010, target of 1035 with the stop loss at 990. What do we do with the Infosys 2600 call which we took yesterday, Dr. Narayan?
Yeah, that was a punt for a fishing of the bottom. We paid about 4 to 5 rupees. I think it's well worth holding it. We are trading down. Okay, 5 rupees on a contract of Infosys is not much of an outlay, which is what I had mentioned while we initiated it also. It is a kind of a punt for the upside. I think one should just hold on, no real deal about booking losses in it and all that. So let's wait and see if the market revives. You would probably get back anything ranging from 5 to 10. If it doesn't, okay, 4 5 rupees, small thing to give. I also recall we had a 750 put which we had looked to buy in a Tata Motors sometime late last week. With an expectation that the prices would trade down to about 750. They have as of today. I think the puts traded up to somewhere around 15 rupees plus. So that is something like a 50-60% gain on what we had originally paid, about 8 to 9 rupees. So since the stock has hit support levels, probably you could think of taking profits in that long put 750 of Tata Motors, which was initiated a few days ago.
750 long puts can square that off, holding on to an Infosys 2600 call which we initiated yesterday. Just wait it out on that one and the new strategy also that we just got.